Hey everybody, thanks for joining us today. Travis Tollestrup here, and my special guest today is Mr. Bob Zachmeier from Tucson, Arizona. Welcome, Bob. Are you ready to roll?
I am, Travis. Thanks for having me.
Listen, I appreciate you being here. I know that everyone watching here, I know your time is very valuable, and I promise you that in the next 20 minutes or so, it will be well worth your investment of time. We're going to get into how to thrive in a challenging market in just a minute. But before we do, let me just tell you a little bit about Bob. I've known Bob. I met Bob out in Denver, Colorado. I think it's been just over a year and a half. And he is just a big-time giver in all that he does. And he has been 10 years, Bob, is that right, since you just had your anniversary, 10th anniversary as your own broker?
Yeah, 10 years. We opened our brokerage in 2004, so we're celebrating our 10th year.
That is so exciting. And just to give you guys that are listening today an idea of Bob's success, over that 10-year time span, Bob and his team have closed over 3,000 transactions. Yes, that's 3,000. So that number still blows my mind, Bob. And I was putting that into perspective, and I'll just share with our listeners here that if you take weekends and holidays off, that's a transaction closing every single business day over the last 10 years consistently. I mean, that's truly remarkable, and so congratulations to you and your team on that.
I appreciate that,
Bob,
Travis.
Yeah, Bob was also our top-rated speaker at our annual Note Investor Summit Live this past year in San Diego, and you're about to see why. He's a service before self kind of guy, and that's why I appreciate our friendship so much, and I know that's why he's had so much success in his business. So we don't have a lot of time today, Bob. I know you've got other appointments today, as do I, and I really appreciate you taking time to share with our listeners today. So let's just jump right into how to thrive in a challenging market. And I know we've got a lot to cover, but I know we wanted to cover three very important things today. You and I have been discussing, and you can just hit that slide. There we go. You and I have been discussing what the big problem is that stops the majority of real estate agents and the majority of investors dead in their tracks before they even get started these days. And you're going to go into that in great detail, so I won't get too much into that now. And I'm very excited for you to present to everybody what you've actually come up with, which I call Bob's note carry solution. And you've got some very creative solutions in an answer to that big problem. And finally, we'll end our time together by talking about a look behind the curtain opportunity to help support Make-A-Wish. And I can't wait for you to share that with people and the story behind why you've decided to make that opportunity available to the general public. And so, well, let's just jump right into it. Why don't you go ahead and take it from here, Bob, and share with us what you've got prepared for today.
Sure, not a problem, Travis. The top 5 challenges in this market right now are for people who've been running in either investors or agents, selling REO properties, purchasing REO properties, foreclosures, short sales. There's hardly any left in most markets, so it's really difficult to find a property that makes sense for an investor. The second one is the out-of-state, the national investment hedge funds have pretty much slowed down purchasing anything, so they're not coming into markets and driving prices higher like they were, so things are slowing down there. Appraisals are coming in low because anytime a market turns around, appraisals use a rearview mirror to establish value, and it's always difficult in a rising market to get the appraisals to come in. There's an increasing supply of homes because fewer and fewer buyers are able to purchase, and the days on market is starting to stretch, and homes are languishing on the market. So we're seeing supplies grow in many markets in the country. And then the biggest challenge is the government, the regulations that they've put in place and how we have to now deal with them in our real estate businesses, whether you're an investor or a real estate agent. So let's start with the first one, the fewer distressed sales. The banks have actually found a new outlet for their REO properties. Rather than foreclose on them, pay title companies, pay real estate agents, pay utilities, pay vandalism, all the expenses, they're just selling the non-performing notes directly to Wall Street and just nipping it in the bud, just saying, boom, give us a check today, we're done. They're going to
Bob,
auction
really quick,
companies.
tell me really quick before you keep going. You gave a number that you had shared with me, a recent statistic of, 10,000. What was that number you talked about earlier today before we got started that represented 20,000 transactions?
Just this week, HUD announced that they were taking another 10,000 assets and selling them directly to Wall Street, to a hedge fund. So that's 10,000 assets that won't hit the real estate market. They're not going to end up on Main Street. They're going to Wall Street. That's 20,000 real estate commissions that will not be earned just from one sale of HUD. That's the second one that I know of this year. Fannie Mae, Freddie Mac, they've all had major 5-digit sales this year where those assets did not come to the local market to be picked up on. So when you think about that, that's over 40,000 homes that I know of that have just been sold off to Wall Street.
And that definitely has its ripple effect, doesn't it?
Right, and if you look at the chart on this screen, I mean, you can see the number of foreclosures, and this is through the fourth quarter of 2013. It's dropped off substantially, and a lot of banks have found a cheaper avenue of going into auction companies, so those aren't coming into real estate agents either. And then the number of short sales has diminished greatly as hope returned to the market. We've seen appreciation in most markets, and it's really starting to limit the need for short sales because people aren't that short anymore, and plus they see hope on the horizon of not being upside down for too much longer. So the second thing with investors, as I said, the hedge funds have slowed. There's fewer buy and hold investors just because the markets have appreciated quite a bit, and the incentive to buy low, sell high has been limited. A lot of people think things are kind of slowing down, stagnating somewhat, and they're not jumping in, buying in the same volumes more. And a lot of that's because they can't find properties to buy, such as fix and flip properties, because you have to buy them at about 70 cents on the dollar to end up profitable. It's very difficult to find them, and when you do find them, it's difficult to get financing on them. So number three, the appraisals. The appraisals are just not keeping up with market appreciation, and the government, in its wisdom, established appraisal management companies to build a firewall between banks and appraisers so that there would be a neutral party. Most of the business now is coming from just a few companies, so these appraisers are running kind of scared where if they get too generous with the appraisal, they could lose the business of that company, and that could represent 25% of all of their workload. And because the appraisal management companies are taking a fee out of the appraisal fee, the appraisers are making less and therefore spending less time at each property, so they're not really looking real hard to get the value as they might have done in the past. Number four, the increasing supply. You have many sellers that are no longer upside down as price increases happen, as we appreciate, and also don't forget that people have been paying their mortgage payments for 10 years since 2004 and 5, and when people that purchased at the high. So they're no longer upside down. So now they're able to sell. So we're seeing a flood of new listings coming on the market. At the same time, we see some of the hedge funds that bought in bulk during 2009, 10, and 11 have actually started dumping their inventory and putting parcels up for sale. There's one company in particular that just listed 2,000 homes for sale. And all the pent-up buyers that for 4 years when prices were falling weren't purchasing homes because every day it was cheaper to buy than the day before. Well, now that it turned around, we're 3 years into this recovery. They've all been serviced now, so there's not a backlog of buyers. And we have a ton of penalty box buyers that just got worse on August 16th when they changed the rules that you have to have at least 4 years after a short sale now in order to get another loan, 3 years if it's a Fannie Mae loan, or I'm sorry, a FHA loan. And then the government protection, and they're protecting us basically from ourselves, and they're protecting us right out of the ability to buy a home. The fifth one, the regulations. Just in the past 12 months, the qualified mortgage rule changed the debt-to-income ratio that a borrower can have, and it's a total of 43 from 45%. So now you can't have as much debt as before, so that took a bunch of buyers out of the market. We have an ability to repay requirement, which is a good thing. However, it's got some real teeth in it that have really scared a lot of private money investors from giving loans. You have the appraisal independence rules, which I discussed on the appraisal slide about the appraisal management companies, and then the longer time period in the penalty box, which just came about a couple weeks ago, and then the Consumer Financial Protection Bureau, which is an office that reports to no one and is an appointment from the president, which was done during a recess. So, I mean, nobody really knows what they can or will do, and that fear of the unknown is one of the biggest fears in the world. So if you notice, this poor real estate agent is surrounded in red tape.
So, but they have great intentions, right? Great intentions to help us. That's exactly right.
So, Travis, I think Ronald Reagan put it best. The 9 most terrifying words in the English language are, "I'm from the government and I'm here to help." And help they have. If you look at just the combination of all those 5 issues that I discussed, look at the result. This just came out on August 25th. The approval rate for mortgages to buy homes dropped to 50.3% in the month of June. You believe that? They turned away half of the people that applied for a mortgage. And that doesn't even include the people who didn't apply because they knew they would be turned down. So just think about that. At least half of the people, probably closer to 60%, that would buy a home are not able to buy a home right now. That's a huge problem.
And that would drive that number 50.3%. Man, that would drive that, to be even worse.
Right.
So you're exactly right.
So this is another statistic that's really scary. I mean, first-time home buyers, the National Association of Realtors says that in a normal, healthy market, first-timers represent about 40% of all sales. So thus far this year in 2014, we've only seen 29% of home sales being purchased by first-timers. That's a decline of 27.5%. Why is that significant? Because first-time home buyers are the start of the food chain. In real estate, the person that owns the entry-level home can't sell and move up unless somebody's there to buy that home from them. And then the person they buy from can't move to the next, to the next, to the next. So, I mean, this starts just a domino effect. When you have 1/4 less first-timers, you have 1/4 less sales across the entire gamut in all the price ranges. And how are homeowners going to move up if there's nobody in line to buy their home from them? So again, this 50% approval is a huge, huge problem. And it's not because people have problems with credit. The actual survey said on this report, 59% had a FICO score of 740 or above, and yet they're still only approving 50% of the applications. So just to kind of summarize all the things we've gone through and who the characters are that are affected, these are the problems that people are facing today. Number one, the buyers. They have tight lending standards and credit mishaps. Many buyers can't qualify for a mortgage, and some of them for several more years. Sellers would like to sell, but they either owe more than their home is worth, or else they don't have enough to be able to sell and put a down payment on a new home, so they're still waiting. Even though they're no longer upside down, they don't have the money to move up. Down payment, closing costs, commissions to be able to sell. And then the agents, real estate agents and brokers who have survived on REO through this whole downturn, I can tell you just from a personal standpoint, Travis, in 2012, we had over 300 REO listings in our brokerage. Today we have less than 5. So it's just dried up very quickly. And with the new buyers who can't qualify for a loan and the sellers who can't yet sell their home, it's really put a difficult situation on most real estate agents unless you get creative.
Well, I think something really interesting there, Bob, that you just mentioned, over the last 18 months, you have had your key lead sources completely dry up, where it's just, brought things to a screeching halt. And I know we're going to get to that in a minute, but it really forced your creativity and your own personal reinvention, which I'm sure people on the call, both agent and investor alike, you're looking for a solution. You're looking for something else. So, and again, you just brought up the investor. There it is. So talk about the
Yep.
investors.
So investors would like to invest. This gentleman in the photo here has a handful of cash, but they can't get loans, and if they can, it's hard money and it's very, very expensive. And when the market starts to go a little bit soft, where the days on market is lengthening, and you're sitting in a hard money loan at 16% interest, it doesn't take very long to bleed out the profit that you made on a property. So there's a lot less investing going on, and there's a shortage of properties that you could buy at a discount and turn around for a profit. So the basic problem are buyers who can't buy, sellers who can't sell, agents who can't profit, and investors who can't invest. So these are problems across all the arenas of everyone that's involved in a real estate transaction. So the question is are these really problems, or is this the opportunity of a lifetime, the perfect storm for agents and investors? I'm going to start with a regular home transaction. There are three players: a bank that gives a loan to the buyer, a buyer who pays the seller for their home, and the seller who puts their money back in the bank. So the banks, as we know, are cherry picking the loans that they give out. And this is an awesome, just staggering statistic, not in a good way. The approved loans in the past 12 months, the median score was 755. That means half the people were higher than that. And again, 50.3% of the applicants were turned down, and that doesn't even include those that didn't apply. So without the bank, you don't have a sale. And neighborhoods stagnate, houses stay on the market for long periods of time. Guess what people do when their house doesn't sell? They lower the price. So this is putting pressure on prices, we're in a very fragile recovery already. We really can't afford this. So we have to think outside the box. Doing things the way that we always did doesn't solve the problems. And this is a quote from Albert Einstein: you can't solve problems by using the same kind of thinking we used when we created them. So here's a fifth problem that we didn't even discuss. I know this for a personal fact. My mother is 80 years old, and I help her with her finances. And she has money invested in banks, and we have several different banks where there's $100,000. This was back when my father passed away, that we limited it to $100,000 because that was the FDIC insurance. And for her $100,000 investment in that bank, her checks have now gotten down to under $17 a month. I mean, that won't even buy you one Starbucks a week if you have $100,000 in the bank. Amazing.
Think about that. Think about that for a minute. 0.2%. And we know the bank, we know what they're doing with it. We know they're turning around and lending it out at higher multiples, and yet they pay out 0.2%. I mean, it's the word that comes to mind is pathetic. That's a pathetic return, for someone who's worked so hard to save their money. And that little image you've got there, that guy, wow. I mean, it truly is a big problem.
So here's how we can help them, help the market, help ourselves. With private financing, we can serve the buyers the banks turn down. So it's kind of funny. The retirees who aren't getting money from the bank actually withdraw their money from the bank and use it to fund the same buyers that the bank turned down. And it's estimated that there's $10 trillion in cash in retirement accounts waiting to fund your deals, waiting for a safe place, a safe haven, because most retirees are getting very skittish of the stock market. So there's the same diagram with just one change. We changed the bank to a retiree. And now the retiree actually creates a note for the seller. The seller gives financing to the buyer buyer makes payments to the retiree. So we've basically reversed the process. Instead of the bank giving the buyer a loan, the retiree is giving the seller a loan. The seller is able to offer financing on their home, which enables everybody to win. So this is the big change, that you have to change the way you think about real estate. Every non-cash real estate transaction creates a note. We've all been programmed, when you find a buyer, you go get them pre-qualified at a bank. You get a pre-qualification letter. Well, we have retirees and IRAs that are a note factory, and when the bank says no, oftentimes they will say yes. So let's look at the benefits that they receive. Buyers who pay rent are getting none of these benefits: rent savings, tax refund, principal payoff, appreciation. Oftentimes, Travis, I've put people into homes, and when you factor in all four of these benefits, they actually are being paid to live in the property instead of paying rent and flushing it that they'll never see again. The sellers benefit. They get more money and a faster sale. Here you have more and more properties listed every day, but how many have financing with them? I can tell you, in Tucson, Arizona, we had 1,295 sales last month, and only 5 were seller finance, with seller financing. I'm proud to say that I had a card in that game myself. Pretty much every month we have one of these or more closing.
Well, Bob, let me just interrupt you there real quick. One of the aha moments that I personally had at the summit, you spoke at our Note Investors Summit in June, and you mentioned that of all the amenities that you include in when you sell a home, the most important amenity, quote unquote, is seller financing. And I had never thought of that in that way before. But then you took it to the next level and you said, all of my sellers participate in my seller financing program, whether they want to or not. And that really took my thinking to the next level. And I know you're going to get to that a little bit here. I know you're definitely going to talk about that more at an opportunity you're going to be talking about later on in our presentation here. But just continue as you go forward and kind of touch on that as you're going through, and I know you will. But I just wanted to point that out for people on the call today, that is pure gold that I hadn't even thought of, and we'll get into that some more.
And what you mean, and what I meant by that, just to clarify, I mean, I always follow my client's direction, but if they are not able or don't wish to finance the buyer themselves, I have investors that I can insert, retirees who I've attracted and who I can put into the process. And the sellers, I've done seller financed loans where the seller actually created the financing but sold both the first and the second loan at the closing table and never had to finance anything themselves. And they were still able to get a higher than market value price for their home because they created value for the buyer.
Well, thank you for clarifying that, because I didn't mean for it to sound like you don't follow your client's direction, but you just put it into much better words than I said. But it's like, because you have a buyer for that newly originated note, which I'm getting ahead of things here, but talk about these agent benefits. Because you're able to do that, talk about those and how that trickle-down effect affects the retirees and so on, including myself, why I'm ultimately even here on this particular interview with you.
Sure. When you get paid multiple times, most of these transactions, we put the buyer and the seller together. I actually run advertising on a local radio program that I am the eHarmony of real estate. I match buyers with sellers, buyers who can't buy and sellers who can't sell. And the business that I get from that, once you help one person and then they talk to their friends who have the same problem, it's like, oh, you got to call Bob. And it just rolls and rolls and rolls and just keeps going and going. And the referrals you get, anybody that's worked with buyers, these are the most courteous, polite buyers. They are just so thankful to be able to buy a home when everyone else has told them no. And so it makes your job very easy. You get paid at least twice as much, if not more. And the deals are a lot faster to put together and a lot faster to close. I mean, most of our seller finance deals close in less than 3 weeks.
Wow.
And then the retiree. If you're earning 0.2 at the bank and I can put you in a 7% loan, that means you got 35 times more money. So just think about this. If you went to the grocery store, Travis, the same amount of money, you'd come home with 35 bags of groceries instead of one. What do you think that means to a retiree?
That's life-changing. It's life-changing. Just to clarify, you said, maybe just back up. I don't know if you can back up there, but it says when you said you put them in a 7% loan, meaning they're stepping in where only the banks are only approving 50.3% of people that have great credit, the 755 FICO scores. Some of these people can't get a loan. They're stepping in with plenty of cushion to back their investment, and they're stepping in and earning that 7% interest rate, which is 35 times more of what they earn in a 0.2% savings account. I mean, Bob, that's amazing. And I know we've talked about just all the pondering you did on how to solve some of these problems, and my hat's off to you. That's outstanding.
And again, it's life that I was helping my mother, and I've been putting her into deals like this for over 5 years. She enjoys a much healthier standard of living because of these transactions than she otherwise would have. So the big question is, what do I do if I don't have retirees or investors? And the bottom line is, well, I have an answer for that too. We're going to cover this more in depth, but for now I'm just going to kind of breeze over the process. And this is actually a friend of mine who, his wife was my real estate assistant for 4 years. They got transferred out of state, and they owned this property. It's a beautiful home, 3,600 square foot home, custom home that they had built. And the problem was they owed $435,000, and the market value is $395,000. It would have been a lot worse, but they actually contracted it themselves and saved $100,000. Now, he worked at a defense contractor and has a secret clearance that cannot have a short sale on his record. She stays home with their 6 kids, and his job just went to Alabama. So how do you help somebody in that predicament? Honestly, I couldn't sleep because these are very, very close friends, until I found a way. And if you look at the traditional close, their company is paying the commission and closing costs, so they weren't out of pocket that, but they had $40,000. They actually even went to their lender and offered to write them a promissory note and pay them 12% interest on the promissory note just to let them out from under the mortgage. And their answer was, either pay the mortgage or we're going to foreclose. So that means a job lost. So what we did is I actually sold the property to a gentleman who sells insurance, makes a 6-digit a year income, and we marked the interest rate up. So we're charging higher interest rate than the bank is charging my friends. And over a 2-year period of time, 24 months, the buyer's credit will have, he'll have improved enough where he can get the loan in his own name. The seller's principal is $930 a month. So when you add those two numbers up, just by waiting 2 years to close this sale, instead of having to write a check and pay payments at 12% interest on a $40,000 debt, my clients are actually walking away with $1,700 in their pocket. So it's pretty miraculous how you can fix a $40,000 short sale just by waiting to close on it for 2 years. So I call this a Robin Hood close for a reason. Robin Hood takes from the banks, the rich, and gives to the poor. Well, guess what? The banks are the rich right now. Everybody who possibly could went in and refinanced to get into these low interest rate loans. So if you have a 3.5% or 4% loan, you're actually sitting on a gold mine, because nobody can even get those rates anymore. And somebody with credit challenges would pay you at least 2 points higher than what you have. So if you'd like to make money on the bank's money, this is a perfect opportunity. Now, a Robinhood close allows the buyer to use the low interest loan, and it's without a wrap. So we're not titling the property in the buyer's name and triggering the due on sale clause. We are just delaying the close. We're writing the contract up and pushing the closing out for a while. It could be as long as like 2016. I have one that doesn't close until November of 2018. So a Robinhood close can help people avoid short sales and save their credit. So if you have a low interest rate loan, why not use the bank's money to finance your buyer? It'll help your house sell faster and for more money, and substantially more money. We're talking tens of thousands of dollars that you will net, because during that time you get all the principal, you get all the markup on the interest, plus you're actually selling your house at a premium. So the irony is the banks pay pennies on the money that you invest with them, but you can earn thousands on their money from the borrowers that they turn down. I mean, that is just awesome. It's a great country that we live in.
Well, I completely agree with you, Bob. In fact, since I've been hanging around with you, there's just so many things that we've put our heads together and come up with. And as you know, we're a national note buyer. And I sat there thinking of, the opportunities to have a win-win solution for these agents who have handfuls, multiple people that have down payment money, and they just don't have a bank that'll underwrite a loan for their client, and everybody loses. And here we are with a base of retirees and other investors, medical professionals that are busy seeing patients all day. We've taught them how to self-direct their retirement investments and invest in real estate-backed mortgage loans. And I'm so glad we've met. But just in what you've been talking about here, I mean, you kind of glazed over at a high level because we don't have a lot of time today to go through it in deep detail. And I know we've gone through multiple case studies together as you've shown me actual deals where, here's what the investor made, here's what the agent made, here's what the homeowner that wasn't able to qualify was able to do, here was the seller who had to get out, skip town, that got transferred, just like your friend that was transferred to Alabama. And there's just countless examples of this across the country. Tell me quickly, I know the one thing we want to talk about as our third item, we've gone through the first two. I know you're going to go into great detail at this event you're having coming up, but talk about this look behind the curtain opportunity that you've been doing once a year now for the last 6 years, and talk about how it started and how people that are listening, whether they're an agent or an investor, and why they might be interested in participating as part of this look behind the curtain opportunity.
Oh, Travis, thanks for that. When I turned 54 in 2000, and I'm sorry, I turned 50 in 2009. I'm 54 years old now, and on my 50th birthday, a lot of people buy themselves a Harley Davidson or a new Corvette or take some trip to Europe or something, and I'm just so thankful for all the people. I'm an Eagle Scout. I mean, I obviously think of all the adult hours that were spent on me when I was a child. I had someone teach me swim lessons, and all the way to where I was a lifeguard in high school. And you think through your life of all the people. If you've ever played in a park, someone donated that land and donated the equipment. So if you look around and look at how much better your life is because of the gifts of others, the question is, when is it your turn to start giving back? So I turned 50, and I just decided that, I'm going to go out on a limb and just make this very aggressive goal, and I want to earn $50,000 for the Make-A-Wish Foundation on my 50th birthday. So
that is cool.
We put together a fundraiser, and I actually hired Blue Oyster Cult to come play my birthday party. We did it. I sold over 250 tickets, put together the venue, was on track to make a lot of money, and then all the expenses started rolling in. And who knew that it cost $12,000 to set up a stage and rent instruments for a 3-hour show. And just the promoters were $5,000, and the expenses just started rolling in. So I had to find some way to offset those expenses before my whole fundraising effort just turned into a fund-losing effort. So I decided, how many people are selling 500 homes a year? So what I did was I just took everything that I had done that year, and I put it all into a course, and I gave it away for free. And I just said, all I want you to do is write a check to the Make-A-Wish Foundation for this. and went over so well. And actually, I'm proud to say that we not only met our $50,000 goal, we actually ended up, when it was all said and done, at about $60,000. So each year, I don't hire the band anymore. I don't need all that overhead that came with them. But each year, I've had a similar course where I just take everything that I've created that year, bundle it up, put it in a 2-day course, and then invite people from all over the United States and Canada. I've had hundreds of people come in here. That one little event in the last 6 years has raised $330,000.
Wow. Congratulations, Bob. That is awesome. The world definitely needs more people like you. And you use the word course. And I've actually talked to attendees that have attended this particular course. They've actually called it a hands-on workshop. You get there, and your business builder Tucson training for Make-A-Wish, and I know the next one's coming up October 2nd to the 4th, but I've talked to several of these people, and they're high-powered real estate brokers, and to this day, they go back and say, I've never seen anyone that there's no secret that's kept. You're literally opening up everything. And so when I say look behind the curtain opportunity, right? I mean, there's just everything, and you've shared it with everyone. And I know you definitely, the door's open to everyone outside of your own market, but it's just, that's what's unbelievable to me. And they've taken this stuff back to their markets, had a tremendous amount of success, and I'm getting to start to work with some of these individuals, as we're very interested in what you've recently developed in your note carry solution, the note carry software that you've developed. And I know you're going through specific cases. You went through one today, but I know you can't. I mean, it's like, how exactly did you find them? When you found them, what was the presentation you did? How'd you talk to them? All of those things. You're going to be really peeling back the layers of the onion of all of these different scenarios and case studies that you've done on recent deals within the last 6 to 9 months. And that's why I'm excited. That's why I'm going to attend. In addition to, I've heard about the unbelievable networking. So what else? What else? I know you had a few other things you were going to be teaching and talking about. There's so much to say real quick, but why should somebody move mountains, reschedule what they have on their calendar to come? What do you feel like it will do to their real estate business, both as an agent and as an investor? But I know specifically you've had a lot of agents come in the past, and this year there's more and more investors that are starting to come, and it's becoming a matchmaking event as well, which is very exciting.
And actually, Travis, I've had lenders attend in the past, because when you really think about it, agents and investors are very similar. I mean, you have marketing, you have conversion, you have deal structuring and closings. I mean, it's all the same. It's just one is doing it for themselves and the other is doing it for others. So this is the aha moment I actually had from your training, was this is so relevant. What I do, in the past I focused on real estate agents, and I've had some of the top brokers in the United States come to this training. When you look at the Wall Street Journal list, I mean, I know at least a quarter of those people personally, and a good portion of those have been in Tucson, Arizona at my event. So, I mean, when you share with others, it promotes sharing, and everybody rises. And one of the things that I think you have kind of toned down your relevance in this field, I think it's amazing, because a lot of people, when they look at this, yeah, but where do I get the money? How do I find the retirees? So we're going to go over all the marketing and the conversion to find the retirees, the buyers, the sellers, everything. But the biggest thing is, Travis, I mean, you've raised $2.6 million in 9 months. I mean, that's almost, what is it, $288,000. It's almost $10,000 a day in the last 9 months. So if you can do it and you've systematized it, and you said in a previous call just this week that you thought you would probably have another $2 million raised yet this year. So, I mean, that's one thing, is Travis is actually going to put on a presentation on how to become a money magnet and attract money. I have Walter Wolford, who is the top-notch best guy I know in this country for IRA investing, to help you tap that $10 trillion pool of IRA cash, and also people who want to send their kids to college. There's education funds. There's Roth IRAs. There's covered L education funds. There's health savings accounts that can all invest in real estate. And Walter's going to give us at least 10 real life examples of how he has marketed and utilized these kinds of funds to fund real estate transactions in his market. We have Dawn Rickabaugh, the Note Queen out of California. She's a national speaker. She speaks at Noteworthy. As a matter of fact, Travis is going to speak at Noteworthy this year in Las Vegas. So, I mean, these are not just, local people that are coming in to tell you what the loan rates are or something. These are people that are shakers and movers and shakers in the industry that are coming. And so I'm humbled that they would give of their time. And I'll just tell you right now, I don't pay a single speaker to come. I don't pay for their hotel room. I don't pay for their airfare. Everybody does this because I'm doing something that's good for the community, and they're coming to help me do it. And that's the most gratifying part of this.
And that's why, you attract who you are. And that's why I want to be a part of it, Bob. And I'm very excited. I'm honored to be able to give a presentation and share. And I found, just talking really quick about attracting capital, we're going to go through several tactical things you can do, but at the same time, I've learned more than anything, just like a lot of the things that you've done, it's a mindset. It's what you affirm to yourself on a daily basis. You had the picture in the presentation of the lady, scratching her head. Well, what easy for you to say. You have contacts with capital and friends that have it, or retirees or known. And what I found out that it's really just looking for opportunities to serve, give, educate, and we're going to go through a lot of the specifics on that. And that's why I really hope people, if you're listening to this and you've got something on that weekend that might be flexible, it's like this is a once a year thing. And I do know you told me before we got started, it's $299. Is that right, Bob? That's a minimum donation to Make-A-Wish to be able to attend. Is that right?
Right, and it's 3 full days of training from 9 in the morning until 5 in the afternoon. 3 full days for $300, and we are located right in the University Marriott, which is on the campus of the University of Arizona. So there's no need for cars. I mean, if you walk out the back door in a half a block, you're at a brew pub. There's restaurants, there's nightlife, there's everything just right there within walking distance. We're not even a $20 cab ride from the airport. Southwest Airlines is having a flight sale right now, $69 one way for a flight. So, I mean, really, this would be very, very inexpensive. If you get one extra deal in the next decade because of this event, and not only, are you paying $300, that's a tax deductible $300 or $299. But, the whole thing is the networking. As any conference, you always learn more in the bar or in the hallway than you do actually sitting in the seat, because you'll meet other people just like you that are at the same problems, the same successes. And when you start sharing your different methodologies with other people that are in the same business with the same work ethic, that's where the power and the networking comes in.
That's exciting. That's exciting. And I was trying to get an idea of how many seats you actually had left before we pushed it out to a lot of our friends and associates. And the venue holds 100. You've got 57 that are already registered, right?
Yeah, and actually there's more coming in every day. People are telling people, and as any event, especially with real estate agents, sometimes it's like herding a bunch of cats. People show up. I mean, I've got text messages from people that have flown in from Florida saying, "Where's the conference?" And it's like, "Who is this?" And they say, "Oh, we came for your conference," and they never registered or anything. So, I mean, I know if I have that many this early, I think we're going to definitely be sold out, and especially just with the content, and I keep adding more speakers, and so we're going to have a night session just as of yesterday with you to raise capital. So we're going to have a breakout session after dinner on one of the nights. I haven't quite got it in the schedule yet, but that room is ours, and the Marriott gives us an awesome break on the room because of the charity. But here's an opportunity to sit with somebody that's raised $2.6 million in a Q&A format rather than a formal presentation format. So that in itself.
I'm super excited about that. Super excited. That should be a whole lot of fun. And I'm obviously a little bit biased, but I think that alone would be worth the trip out to have an endless amount of capital to go out and fund the deals. And then really it comes down to you creating your market. It's like, how much do you want to work? If you knew you had the capital to fund all of these borrowers, potential homeowners that aren't able to get qualified traditionally, and you're able to help them with that solution, that's exciting. You've got something up on the screen there. More millionaires were created during the Great Depression than any other time in history, and I believe that the deal of the century comes along, right? Once a week. I love that saying. So talk about that real quick.
This opportunity, because everyone seems to be paralyzed. Investors are paralyzed by Dodd-Frank. Oh my gosh, I don't want to get in trouble. Agents are scratching their head because the things that they've done for the last 20 years aren't working anymore. And buyers are frustrated they can't get into a home. Sellers are lowering their price because their home isn't selling. But the problem isn't the price. The problem is that there's buyers that the bank won't give a loan. So what if you raised your price and then offered financing? I mean, it just makes more sense. And then if you're the agent that puts that deal together, I just want to share with you, Travis, I closed a $71,000 purchase this week. I had both the buyer and the seller used my brokerage to purchase. The investor this is a flip project. The investor is going to relist it with me, and I'm going to bring in a buyer who I've already got waiting in the wings to purchase that house after it's rehabilitated. I will make over $12,000 in commission on that $71,000 home.
How
much is this conference again?
Well, just so you know, you've told me we've gone over that at a high level, and one of the reasons I'm leaving my family, I've got a bunch of kids and they've got commitments, and I hate leaving my wife, just to tend after all their various needs. But when I decided to go to a conference, I really study what am I going to get out of this, and one of the things I'm coming for is, besides the great networking, is this particular deal that you just talked about. I want to see that thing broken down in its detail so that we can find all the things that are somewhat formulaic, that we can go out and create a cookie cutter opportunity where we can be part of providing the capital to do those deals. And I'm excited to get there. So again, thanks for having me. I know we're short on time. Go through that last slide that you had there before we tell people how they can get registered.
Sure. This is the very first slide that we started with in this presentation, and it was the challenges that we needed to overcome. And what we're going to cover at the conference is, first of all, these are not challenges, it's an opportunity. And the upside-down sellers will fix the few distressed properties. The investors, if you sell them the paper instead of the property, they can get a higher rate of return with none of the hassle. When you have appraisal issues, guess what? When there's seller financing, there is no appraisal. When there's an increasing supply of homes on the market, all we have to do is find the credit-challenged buyers who are willing to pay more, and therefore sellers are able to sell their home quicker when they offer the financing. And then the government regulations, we have been Dodd-Frank compliant for well over a year, so even though it only came into law on January 10th, my program has been working for well over a year. Within those guidelines, there's not one thing I've had to change about the way we did it. So everything is in place. If you want just a step-by-step, soup to nuts, how to do it, that's what we're going to show, is how to market, how to attract, how to convert, how to close and structure and do all these deals. So here's the information about the event. I hope everyone can come. We are limited on space. This is on a college campus. There's lots of activities, lots of athletics and things that happen. So I wouldn't wait too long. It's going to fill up. My block actually expires next week. So if it isn't full, I mean, there's a good chance that you won't be able to. If you called that hotel right now, I don't think you can get a room without my room block.
Very good. So if you're a real estate agent or broker that's looking to establish a more predictable income, or you're already a seasoned veteran that you're happy with your business but would like to see your income go to the next level, this event is for you. I think there's lots of events that you can go to and attend. I believe this is the event of the year. If you're an investor, right, that's looking to make connections with, these highly trained deal structure experts, that Bob's going to be creating. I'm excited about that, where we can be networking and creating business for each other that is going to work really well. Very high level networking. If that sounds like you, you'll definitely want to make this. This is going to be a nationwide program within the next 12 months that I'm excited to be a part of helping Bob get off the ground, and he's been having a tremendous amount of success for the last 18 months with it. And obviously you see there, if you have any questions, go ahead and get registered at the link below this particular video. And if you've got any questions, there's 2 email addresses, one for Bob and one for myself. You've got 2 phone numbers that you can get a hold of. That number next to mine is actually my direct cell phone. So if you have any questions at all, you can give me a call. If I'm in a meeting, my assistant gets right back to my voicemail. Join us. Join us in Tucson, October 2nd through the 4th. And thank you for your time today, and we hope to see you there.
All right. Thanks, Travis. I really appreciate you helping me raise some money for the kids.
Bye-bye now.